Hello from the Dukas Copy TV studio in Geneva. We are back with a technical analysis with Jean-Francois Owczarczak from the Management Joint Trust with their product FinGraphs. Welcome, Jean-Francois, to the studio.
Hi, Daniel.
So finally there has been an agreement. The last minute, last second, we don't know, but finally an agreement with Greece and the Eurogroup. So the markets, the euro are reacting relieved on the one hand, but the euro dollar is correcting down in perspective. Why is that?
Okay, well, we're back on our FinGraphs mosaic. We're going to have a look at the euro dollar today. We're going to have a look at gold and the market. But what we could say about the euro deal is, one, we don't have that much information about it yet. And then probably because it's a compromise. I mean, it's interesting, and maybe we will go straight into the charts and look at euro dollar here with this investor's view, so the perspective over the next few quarters with a weekly chart, over the next few months with a daily chart, and over the next few weeks with an hourly chart. And if you look at the hourly chart, we could see that as the negotiations got tougher last week, the euro actually made quite a foray up, almost to 112. And maybe part of the market was at least attributing some kind of a Grexit premium to the market in case the austerity-prone countries did have their way in setting Greece on the course of exiting the euro. Well, that didn't happen. We have a compromise. It seems to have been quite a tough compromise for Greek also. I mean, the measures which are being fed to the market are pretty tough, probably tougher than the ones the Greeks voted against about 10 days ago. It's really a compromise, and at the moment it seems like the euro is correcting down, but is still holding on the levels that we've seen over the last weeks and months. So 2 weeks ago when we were here, we highlighted the levels of 110 to 110.50 as being very important support levels. We went intraday slightly below them last week, but managed to close above them. And I think these levels are still valid at the moment over the next few weeks. Now, if we look at the longer term picture, we would still be negative on the euro on this weekly chart, so the perspective over the next few quarters. And you could see here that our projections are not quite over yet, and that our targets could lead us down to almost to parity on our lower targets here. On the risk index, we were in the oversold at the beginning of the first quarter, but the envelopes were still heading quite aggressively down. This is typical of what we usually see in an intermediate bottom. So you have an intermediate bottom, a correction up, which doesn't seem quite over yet, and then resume the downtrend into a new bottom, possibly towards early 2016. Now, if we look at the daily, we could monitor this correction up more closely. As we can see, the initial levels have been done, yet it hasn't resumed its downtrend yet. So you can see the envelopes are heading slightly up. You almost have some point of stress here where both envelopes are touching each other, so that is going to give more support. And this correction up doesn't endanger the longer term downtrend as long as it doesn't make it above our corrective targets. And that's still pretty far out in the region of 116.90, 117. So as long as we stay below the 117 level, we'll still be long-term negative on the euro. Now, looking at what we have here, now in the short term again, we had this correction up last week, partial retracement of it this morning. Also here, for the euro to gain momentum to the upside, we really would have to make it above 112.30. So at the moment, that is quite a distant perspective. Now, there's still a lot of uncertainty. The plan has to be passed through the Greek Parliament on Wednesday. If it doesn't, there's probably going to be new elections. There's still, I mean, we have a deal. There's still a lot of things to check along the way to make sure this is going to hold. Now, in terms of a level, as long as we stay above 110 to 110.50, we would still trust this correction up, possibly for another few weeks at least.
Okay, so this is the range so that we can calculate with according to FinGraphs. So if we go for gold, so if you said there's still a lot of uncertainty if Greece is going to be...
Well, gold hasn't reacted much to all this Greek debt crisis. There's possibly two reasons for that. We're still in an environment where we anticipate rising interest rate costs, and interest costs is an opportunity cost of holding gold. And what we seem to have realized with this, with all the Grexit talk, is that the market at least considers that the Greek problem is probably ring-fenced today from the rest of Europe, or at least that's what seems to come out from what we see in the gold price. So as we have been over the last few years, we're still negative on gold at the moment. Our weekly chart still gives us targets in the low 1000s over the next few quarters. Our daily charts are still negative with targets towards 1070 to 1125, so that's over the next few months. And on the hourly, the current move down, with the announcement, we're probably going to see some more downside potential, but we're seeing gold moving down towards 1156 to 1142 over the next few weeks. So still negative on gold, and for the two reasons we just mentioned.
Mm-hmm. So if we have a look, of course, to the equities, how do they
Well, we'll look
today?
at the 3 months S&P. We've been positive for quite some time on the S&P, probably the better part of 2, maybe 3 years. I mean, September 2012, so that's 2.5 years. We still think that over the long term, although we do see signs of exaggeration with our envelopes touching each other, our risk index is not quite there yet. And the machine here is anticipating impulsive to extended targets, which could lead us up to above 2200, up to possibly 2400 over the next few quarters. So at the moment, we don't believe this move is over, and what we've seen over the last few months or weeks is possibly an intermediate consolidation. Now, this intermediate consolidation can be monitored here on our daily. We can see that we had a top here in May with our envelopes touching each other, nauseated, which was not quite in sync, but pretty much in the overbought, and that we have since been correcting down. This corrective down move at the moment has almost reached its target in terms of time it has, in terms of the price. We could have gone a bit lower and might still go a bit lower. We cannot here confirm that this correction is over yet. In order to be really an alarmist on what could happen there, we'd really need to make it into impulsive territory, and we're still quite far away from that. I mean, we have our targets. The lower end of our corrective targets is around 1981. That means that as long as we stay above this level, we would consider this move as a mere consolidation in what is still a long-term uptrend. Now, over the short term, the hourly, we're seeing quite an aggressive move against the trend we show here. Possibly, we cannot confirm that this move is quite over, that it may not have a pullback, but it does have a bit more to go here. It could lead us down to 2000 to 2033 over the next week or so. But in general, in the environment that we mentioned here, that possibly towards what could be the end of a consolidation, we're still positive over the long term. We wouldn't be surprised if this indicator turned positively quite quickly.
Thank you very much, Jean-Francois, for being here today.
Thank you.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a good day and see you next time.